All right, so this is THOR, Synthorx Inc., and we're doing pure technical analysis. We are going to have future videos where we do fundamental analysis or a hybrid, but for right now, we're just walking you guys through technical analysis. So right now, we're looking at triple bottom on bullish divergence. So it doesn't have to be exact as far as the dollar amount, but you're looking at a general triple bottom if you drew a horizontal line here like I drew. You could also draw one right where the bodies, bottoms of the bodies, and it'll be pretty accurate. So that's really important to remember, is that triple bottoms are not exact, but as long as it looks to the naked eye like it's a triple bottom, then it could definitely be considered one, especially on the monthly chart. That this could be like a 50-cent difference. But and then also these wicks, look how long the wicks are. But if you like drawing that line, looking at the bottoms of the wicks, it's pretty accurate. I mean, it's pretty. They're both at around, looks like $11. 10, 50, $11 as far as the bottoms. So, but you just want to eyeball it. But yeah, so we've got a triple bottom on bullish divergence. And we also saw this little triple pinch up on the red ADX lines. We saw those here as well, but they were just a lot more visible and conspicuous with the ADX modified as opposed to the regular ADX. So, and every time the red pinched up, the price popped up, right? Then came back down, popped up, and came back down. And then so we're going to be confident that we're going to see a third pop up, but we just don't know how much. And then here, the stock RSI, we're showing divergence. So you see how these bottoms are getting higher. That's bullish divergence. That's showing where the price could go, especially when you're at a triple bottom. So you got a triple bottom. You got stock RSI divergence climbing up. The RSI, slight divergence. It's still divergence. You can still see it. There's less space between this black line and then that 40 handle. There's more space here than here, and then here. There's the least amount of space. So it is going up a bit. And then here, not divergence, obviously, but it is really wide, and this is kind of a flat board. And I said in previous videos, I love flat boards. Doesn't always have to be a straight line, but as long as it's flat, if it's coming down and it's flat, if it's, generally, even if it's going up and it's flat, but generally, the fact that this is flat, if there's a conflation of other indicators that I really like, then that might add. So now let's look at the weekly chart. So it looks like well, obviously we'll see what happened, but I also want to make sure that the monthly, the weekly, and the daily look actionable. Like, hey, let's get in here. Even getting in here around, $12, $13, even $15. Obviously, in hindsight, it was a phenomenal speculative play or phenomenal investment or trade. But if you could get in near that third bottom, that's an even better price point. But we could talk about that in future videos as well. But obviously, anywhere in that $4 or so range, in hindsight, was a phenomenal bet and good timing. So here we've got sort of, well, first of all, we had another flat board here. You see how the bodies are really shallow, really thin. It's kind of a flat board. And then there's bearish divergence here, because that's kind of going up. I mean, the tops are at least flat, if not a little bit higher. And then slight divergence here on the RSI. Again, not divergence here on the MACD, but you're forming kind of, I don't know, what I like to call a vanishing point, where either this green line on the MACD is going to either bounce up or potentially come down. And especially when you're seeing other pieces of evidence that suggests bearishness, and we're above the EMA and all that stuff, might look like a good time to get short. And that was, obviously, it dropped tremendously. Then we spent a couple of years, or excuse me, less than a year, bouncing off, sort of the bottom here at 10, and you can see much clearer the triple bottom right around 10 and change. And so that third one, it just, every time you have another bottom, like the second bottom or the third bottom, you increase the odds that if, especially if there's other mitigating factors that are bullish, like bullish divergence from the other indicators, etc., that increases the odds that the next move is going to be a big move. So if we don't get that big move, as we saw in the second bottom here, we saw a shallow move, went to 20, but then it came back down again, back at 10. So I love threes, and the second thing that I love is twos, but threes are number one. And this is a third bottom, so it's really a positive, and it's not a coincidence that these patterns happen over and over and over again. So it's pretty intriguing. And if you got it in right around $10 on that third bottom, looking at this rounded minus DI line on the ADX, and then it's sort of a upside down, or it's a mountaintop, a very tight but neat mountaintop on the ADX mod, and then we're coming off of oversold in the stock RSI, which is a positive. But perhaps the most important thing is that the RSI is showing strong bullish divergence now. So even though it was showing bearish divergence, the price dropped. Then ever since then, it was showing bullish divergence. Now, obviously, timing is everything, and we are sort of cherry picking these trades. However, I think it goes without saying that learning these patterns and seeing that, hey, if I can recognize these patterns and I see 10 stocks that I really like, all 10 will not be grand slams. I will tell you this right now. All 10 will not be home runs. But you can mitigate your downside risk on the ones that don't become home runs. And especially when you're at like a triple bottom, say, oh, well, the monthly has to close above 10 or I'm going to get out. Because then that triple bottom breaks. I mean, there's different rules. I mean, I'm not saying that's the only rule, the only. That's just like just an example of a rule. I like end of period closes. So if you're looking at a monthly chart, actually this is a weekly chart. So if the end of week, so Friday, the last 15 minutes of the session, it looks like we're going to close below $10, then you would just get flat, right? And then you would reassess, reevaluate for a brand new trade, or which may be in this market or might not be in this market. So it becomes a brand new trade, when that breaks, and so you have to always be reassessing. Is this the same trade, or is this a new trade? Is this a new analysis? But anyways, this bullish divergence, very positive, and then now we've got strong bullish divergence on the MACD. The monthly also looked bullish, also showing divergence. So the weekly, not surprising, shows divergence, but it just looked really good on that triple bottom. And now let's look at the last one, which is the daily chart. Massive pop on triple bottom with bullish divergence. And this dot is where the price went. We went all the way up to $67 from $10. That's a 6 plus X return. That's a phenomenal return. It's pretty obvious that you can see it on the graph, but yeah, I mean that's pretty amazing. Obviously, you don't want to put your retirement or your life savings in this trade with this market cap and this share price, etc. But it's still a nice move, and it was a phenomenal trade. Obviously, you're going to play this out like a trade and not like an investment. Especially if you see this kind of move. Now, some people want to stay in, but a 6x, 7x return is pretty amazing in a very short time frame. This happened in a matter of like a couple of days. I mean, obviously, after we jumped up to above the EMA, we didn't close below the EMA for many, many, many days. So that is like a firming. It just keeps firming up the. I mean, this is we slightly closed below the EMA here on this day, but by and large, I mean, we're right above the EMA. So we're talking. This is like, I look at this as like a hardening concrete ground underneath your feet, right? You lay down the concrete. It's really hot outside, and you want it to just like get dry. Um, and so, the more days that the price closes above this exponential moving average in a row, minus maybe one day that it's like teeny bit below, but if it's like 20 days in a row, which this is, maybe even 30, because this is a month. So this is about 30 business days, like right around there, between 20, probably 22 and 30. Um, I mean, only one day out of all of those days, we closed even a fraction, a hair below the EMA. It was always above the EMA. So that's really forming a launching pad for this kind of a move as a potential. Plus the divergence on the monthly, plus the divergence on the weekly, plus this is divergence as well. The fact that the stock RSI, we're getting higher, higher, higher. So the fact that this is going lower here and this is coming higher, that's the bullish divergence, right? And then we're seeing bullish divergence here all the way across, and even on this, which I really like, all the way across. And even on this one. So even though this is flat, this is part of our triple bottom, the indicators are going up. That's beautiful. But I also like it when not only the long term is showing bullish divergence on the daily, but also the short term. So even this piece here, where this is, this bottom is up here, and then it gets a little lower, and then it gets even lower. And then it becomes a part of that main triple bottom. So now when that shows bullish divergence on these indicators, and we have the long-term bullish divergence that goes all the way back to January of January 2019 on this triple bottom in 3 different time frames. Now you've got a really good setup for a speculative play, for a fraction of your holdings, of your risk capital in the equity markets. We could talk in separate videos about what percentage you should put in and all this and this and that. But hopefully this was helpful. This is a pure technical setup, and what a pop. From $10 up to 67 and change. It's an unbelievable move, and it only took one day to go from 25 to 67. So that was a spectacular pop. But even 10 to 25 is a phenomenal, 150% rally. So if you were able to get in near that third bottom and have the confidence, which is one of my thesis statements with these videos, is having the confidence to get in there when something has been beaten down if you really like the setup and take a shot, and sometimes you get rewarded handsomely. Thank you very much.